Yes, people, done with your break. Welcome back after break. So, guys, before break, we have completed two sections. One is the section 68. Section 68 is a cash credit, means any amount is credited in your books of accounts, and you have offered no explanation or your explanation is not satisfactory, then it will be treated as your income. Now, guys, unexplained investment means you made the investment. When you made the investment, and which investment are not recorded in the books of accounts. When you in your books of accounts you have not recorded the investment, and guys, assessee offer no explanation about the nature and source of investment, or the explanation is offered is not satisfactory in the opinion of AO, then it will be treated as your deemed income and it is going to be taxable at the rate 78% rate. Now guys, next is the section 69A. 69A is related to unexplained money or unexplained asset, etc., etc. Here guys, it was about the unexplained investment. Example is like Nidhi made the investment in the Reliance share. So Reliance share is purchased by Nidhi and Nidhi could not able to explain the source of that money. Then it was unexplained investment. Now it is an unexplained money or asset. Guys, suppose in your possession, department found any money or any bullion or any jewelry or any other valuable article, and same is not recorded in the books of accounts. Means suppose at your home they got some money of the 20 crore rupees. They ask you from where you got this money. You are not able to explain that. Or at your home, suppose they got any bullion or jewelry or any other valuable article and things, and you are not able to explain from where you got this money or bullion or jewelry, and you have not recorded in the books of accounts, and they ask you from where you got, you are not able to explain. You are not able to explain, or whatever you explain that is not satisfactory, then it will be treated as your deemed income, and guys, it is going to be taxable at the rate 78%. Done. So it was unexplained investment. Next section 69A is related to unexplained money. Means in your possession they got the money or bullion or jewelry or any other valuable article and things, and you are not able to explain, then it will be treated as your income. Now next part is the section 69B. 69B is very simple. This section says that, okay guys, you made any investment, or suppose in your possession some asset, money, bullion, jewelry or any other valuable article and things are there. You have recorded in the books of accounts, but you have not fully recorded. Means suppose you have recorded in the books of accounts but not fully recorded. You have recorded in the books of accounts but not fully recorded, then whatever the difference, it will be treated as your income. I can take an example. Okay, suppose today's gold rate is a 60,000. 60,000 gold rate is for 10 gram. For 10 gram, it is 6 lakh, I think. For 10 gram, 1 gram, it is a 6,000. For the 10 gram, this is the 60,000. And for the 100 gram, there is a 6 lakh. And guys, for the 1 kg, for 1 kg of gold, today's rate is a 60 lakh rupees. So 60 lakh rupees is today's price of the gold for the 1 kg. Now what happened? Suppose I purchase the gold of 1 kg and I have mentioned that I purchased this gold of 1 kg in the 25 lakh. Now how it is possible? And I recorded in the books of account also. I recorded this gold in the books of accounts and I have mentioned that I purchased this gold for the 25 lakh and I purchased the gold of the 1 kg. So guys, 1 kg gold value is 60 lakh. I have recorded in the books of accounts is 25 lakh. Then guys, difference of 35 lakh will be treated as my income. That is the section 69B. So what section 69B says that? Again, read it. Amount of any investment, etc., etc., not fully disclosed in the books of accounts. Not fully disclosed in the books of accounts. So here they say is that where in any previous year the assessee has made the investment or is found to be the owner of any bullion, jewelry or any other valuable article, and the AO find that the amount is spent on making such investment or in acquiring such articles exceed the amount recorded in the books of accounts. Means your actual investment could be the 60 lakh, but you are showing that you purchase a 1 kg gold at 25 lakh only. then and he offer no explanation about the difference, or explanation is not satisfactory, then guys such excess may be deemed income of the assessee for that previous year. It means guys, here difference 60 lakh minus 25 lakh, your difference will be the 35 lakh. So 35 lakh will be treated as your income. 35 lakh rupees is going to be treated as your income. 35 lakh is going to be treated as your income. So what I am saying, that try to understand. Okay, here now guys, what is the difference between three sections? 69 says that unexplained investment means you made the investment, you have not recorded at all. Second is unexplained money, means you have any money or jewelry or any other valuable article and things you have not recorded at all. Now 69B says that you have recorded but not fully recorded. You have recorded but not fully recorded. So whatever the difference, that will be treated as your income. You got my point or not? Yes. Now next part is section 69C. Now 69C is about the unexplained expenditure. Unexplained expenditure. Now this section says that suppose you have spent some money, and when asked from where you got this money, you are not able to explain, or you are explaining but that is not satisfactory. For an example, on Meghna's marriage, there was expenditure of the 1 crore. Now assessing officer asked to the Meghna's parent, from where you got this 1 crore. Now Meghna parents not able to explain. Meghna's parent just saying that Balaji has given the 1 crore for the Meghna, so we just spend on the marriage. So question is that explanation is satisfactory? Answer is no. So when this explanation is not satisfactory, then this amount will be treated as, whatever amount is spent, that will be treated as your income. So 1 crore rupees will be treated as income and it will be taxable at the rate 78% rate. Here tax rate is a 78%. So what this section says, try to understand. Okay, where in any previous year, assessee has incurred any expenditure, that is Meghna's marriage, and he offered no explanation about the source of such expenditure, or the explanation is unsatisfactory in opinion of the AO, then AO can treat such unexplained expenditure as the income for such previous year. Such unexplained expenditure which is deemed to be income of assessee shall not be allowed as deduction under any other head of income. Means whatever your unexplained expenditure, and suppose this is treated as income. So question is that can you claim that expenditure as a deduction under any head? Answer is no. That expenditure you cannot claim as deduction under any head. That expenditure you cannot claim as deduction under any head. You got my point or not? Yes. Now next part is the amount borrowed or repaid on the hundi. Section 69D. What this section says that is, suppose guys, I have one hundi. Hundi means promissory note. Hundi means promissory note. Nowadays that hundi is not in the trend, but earlier it was in the trend. Like 100 years ago, there was one concept is called hundi. So what happens? Suppose Meghna has given one hundi to the BB. So Mr. BB and here Meghna. Meghna has given one hundi to the BB, and suppose that hundi amount is a 50 lakh. Hundi is a 50 lakh. Hundi amount is a 50 lakh. This is the promissory note. And Meghna mentioned that, sir, I will give you this 50 lakh on the 16 Feb 2024. So here one date is there. So after 2-3 months, I am going to get the 50 lakh from the Meghna. So this is one promissory note. Now, on the basis of this hundi, suppose I borrowed some amount from one person, Mr. Keshav. There is a one person, name is Mr. Keshav. So from Keshav, I just given the hundi, and on the basis of that hundi, I borrowed the cash loan. Means I have taken the cash loan from the Mr. Keshav on the basis of that hundi. Then guys, whatever cash loan I have taken now, that will be treated as my income, and it will be going to be taxable at the rate 78%. Or suppose if I repaid that cash loan, repaid in the cash, then it will be treated as my income and it will be taxable at the rate 78%. But suppose when I took the loan, that time it is already treated as my income and it is already taxable at the rate, 78%, then at the time of repayment, it will not be treated as my income. So what this point says, that try to understand. Where any amount is borrowed on the hundi, any amount borrowed on the hundi, or any amount is due thereon is repaid other than the through an account pay check drawn in the bank, means you have paid in the cash or you borrowed in the cash, The amount so borrowed or repaid shall be deemed to be the income of the person borrowing or repaying for the previous year, in which the amount was borrowed or repaid as the case may be. Now, however, where any amount is borrowed on hundi has been deemed to be the income of any person, he will not be again liable to assessed in respect of such amount on repayment of such amount. The amount repaid shall include the interest paid on the amount borrowed also. Guys, here this income is taxable at the rate 60%, surcharge 25%, health and education says 4%. So effectively there will be a 78% and there will be a penalty also. That penalty will be 10% of the taxes. Now where will be the penalty? Penalty is given in the penalty topic. So guys, this next topic is a penalty topic, and under penalty topic there is a section 271 AAC. And 271 AAC says that suppose if your income is a deemed income under section 68 to 69C, then there will be a penalty of the rate 10% on the tax on deemed income under section 115 BBE, and its penalty will be charged by AO, Joint Commissioner Appeal, or the CIT Appeal. So here guys, if income is deemed under this section, tax rate will be 78%, and on that tax there will be 10% of the penalty. 10% of penalty. So 78% multiplied by 10%. Done. So this is the completion of this section 68 to section 69D. Now we are going to start with the next part. There is a one section 281. 281 is related to some miscellaneous provision related to some assessment topic. So guys, here section 281. This section says that certain transfer can be treated as void. Means suppose if you have transferred some asset, then department has the power, then they can treat that transfer as void. But when? I can take an example. Suppose guys, for an example, now when my assessment was pending, then I was thinking that there will be a huge interest, huge penalty, huge tax. So what I will do? I will declare myself as insolvent, and before that I will transfer all my asset to my related parties. What I will do? Either I will transfer asset to my wife or my son or any other person and all. Then lawmaker says that here our department has the power that they may treat certain transfer as a void transfer, and they can take away that asset again. So here what this section says, try to understand. Where any tax or penalty or interest or fine, anything is more than 5,000 is payable by SSC. Means anything more than 5,000 is payable by SSC, and the asset which is charged or transferred by the SSC is more than 10,000. Means more than 10,000 value asset you have transferred. During the period pendency of any proceeding under the act till the service of notice by the TRO. TRO means tax recovery officer. So guys, when your assessment is started, that is called your pendency of assessment, till the service of notice by the TRO. TRO means tax recovery officer. Tax recovery officer will serve you one notice. When TRO will serve the notice, suppose you have not paid the taxes within 30 days of the demand notice. Demand notice you receive within 30 days. If you not paid the taxes, then TRO will serve you notice and he will do the recovery proceeding. So before issuing the TRO notice and during the pendency of assessment, suppose if you have transferred any asset, then guys, that asset may be treated as deemed to be the void transfer. So what I am saying that here, okay guys, if your tax payable or any interest or fine is more than 5,000 and you are transferring the asset that is more than 10,000, you are transferring the asset that is more than 10,000 and you are transferring during the pendency of the assessment till the service of notice by the tax recovery officer, then it will be deemed to be void transfer. But there are certain exceptional cases. Charge or transfer shall not be treated as void in the three cases. When? If it is made on the stock in trade of the business. If it is on the stock in trade, then it will not be treated as void because the stock in trade here you can transfer. Second is, if it is made for adequate consideration and without notice of the proceeding being pending or sum is being due. Means suppose if you transferred for the sufficient consideration and you were not aware that your proceeding is pending or any amount is due, and if you transfer for the sufficient consideration, then it will not be treated as void. Or suppose if you transfer with the prior approval of assessing officer. Means if you have taken the prior approval of assessing officer and if you transfer, then guys it will not be treated as void. You got my point or not? Yes. Now there is a one case law of the Manoj Kabra, Allahabad High Court. Question is that, suppose for an example, I have transfer any asset to someone during the pendency of assessment. Department can say that it is a void transfer. They have the power. But question is that department themselves, AO themselves or AO himself, can he treat that transfer as void, or he should request to the court and court will decide that, court will declare that transfer as void? Right answer is here in the Manoj Kabra case law, Allahabad High Court says that court will decide that that transfer is void or not. Court will decide that that transfer is a void or not. Here AO will not able to decide that. Only AO cannot say that it is a void. No, he has to file a suit in the court and court will decide that yes, that transfer is a void, then it will be treated as void, otherwise it will not be treated as void. So here what this case law says that, in order to declare the transfer as fraudulent under section 281, an appropriate proceeding in accordance with the law was required to be taken under section 53 of the Transfer of Property Act, under section Transfer of Property Act 1882. The AO is required to file a suit for the declaration of effect that the transfer of transaction was a void under section 281 of the Income Tax Act, but he himself cannot assume jurisdiction to declare the sale deed as void. Means he cannot say that your sale deed is void and again take back that asset. Answer is no. He has to file a case in the court and court will be treated that transfer as a void. Done. After that, there is a one section of the provisional attachment of the property. But here there is a one section 271AD. This is related to the penalty. So let me first explain you 271AD. So in the penalty topic, there is one very interesting section. That is the section 271AAD. And this 271AAD penalty, this is for the false entry or any omission of entry in your books of account. Then guys, department has the power that they can charge the 100% of the amount of the false entry or omitted entry as a penalty. So what this section says, that very interesting. In the market, you know that many people do the false entry, fake entries, fake bill, fake invoice. So here our income tax department has inserted one section. This section is a 271 AAD. This section says that a penalty for the false entry or omission of any entry which is relevant for the computation of total income of such person to evade the tax liability. Means your motive is to evade the tax liability, and for that purpose, suppose if you did the false entry or if there is a omission of any entry which is relevant for computation of total income and you did only to evade the tax, then guys, AO or Joint Commissioner Appeal or CIT Appeal, they may charge the penalty of the 100% of amount of such false entry or omitted entry. Now false entry means, for an example, in your book, you posted some fake expenditure. Suppose for an example, traveling expenditure, there is no traveling expenditure, but you just posted the traveling expenditure. That is called false entry or fake entry. Or suppose omitted any entry. Now omitted entry means you have not recorded any sale transaction. Suppose for an example, there was a sale transaction. You have not recorded that sale transaction. So when you have not recorded that sale transaction, then also it will be treated as the omission of the entry, and here there will be a 100% penalty. Now guys, there is a very interesting part. Okay, what do you mean by false entry? So false entry, here they define the false entry. So false entry means include, use or intention to use any forged or any falsified document. Means you are using any forged or any falsified document such as a false invoice or in general a false piece of documentary evidence you are using. That is called false entry. For an example, you taken one fake invoice. You have taken any fake invoice from someone, and guys, you are putting that expenditure and you are saying that this is the invoice, but this is the false invoice, this is the fake invoice, then it will be treated as the false entry. Now one more interesting point, this second point is very interesting. This is saying that invoice in respect of supply or receipt of the goods or services or both issued by the person or any other person without actual supply or receipt of such goods or service or both. This is, guys, you know that you take the fake bill for only for GST credit and all. Means suppose I have taken one purchase bill, but actual goods I have not purchased. Or many times what happened, I suppose I taken one CA chartered accountancy like a bill from my one of the friend. He is a practicing CA, so just to claim the expenditure I taken the bill. Now actual I have not obtained the service, then it will be treated as false entry. Means actual goods you have not purchased, actual there is no supply of goods or service, and there is a only invoice, then guys it will be treated as a false entry. Or suppose, guys, there is an invoice from any person and that person is not exist at all. Suppose that person is not exist at all. For an example, I have purchased one goods from the Ram Bharose Limited. Now invoice, I have just printed one invoice book and Ram Bharose Limited, and there is no Ram Bharose Limited at all in the market, then it will also be treated as a false entry. So here last point, invoice in respect of supply or receipt of goods or service or both to or from a person who does not exist. That Ram Bharose Limited is not exist at all, and there is an invoice from that person. There is a goods, you are saying that we have purchased the goods or like services from the person, that person is not exist at all, then guys it will be treated as false entry or false invoice. So here section 271A(d) says that if there is a false entry or omission of any entry and your objective is to evade the tax liability, then guys 100% of amount of such false entry or omitted entry will be charged as a penalty. You got my point or not? Yes. Now one more point. Here guys, under this section, penalty will be charged on the assessee as well as if any person motivated to take the false entry. If any person motivated to do the false entry, then penalty will be charged on that person also. Means for an example here, suppose I took some fake invoice, then penalty will be charged on me, but my chartered accountant motivated me. Means chartered accountant, suppose chartered accountant motivated me to take the false entry, then guys here penalty will be imposed on chartered accountant also. Here penalty will be imposed on the chartered accountant also. So what this section says, this penalty applicable on person who makes such false entry or omit on entry to evade the tax liability, and guys, and any other person who caused the person, in any manner to make the false entry or omit any entry to evade the tax liability. So here guys, here this is applicable on the person who makes such false entry or omit an entry to evade the tax liability, and any other person who caused the person means who motivated the other person to make the false entry, then on other person also this penalty will be charged. So guys, don't motivate to your client okay, just make the false entry. If you motivated then penalty will be applicable on you also, and from where you will pay the 100% of that amount of false entry. So here penalty will be applicable on you also. Done. So this is the section 271A(d). This is one section. Section 271A(d). Now next part. Again, check that section of the section number 281B. That is called provisional attachment of the property. Now guys, this section you can mark as IMP because they used to ask question from this section every time. Like every after 1 or 2 attempts, they used to ask one small question from this section, that is called provisional attachment of the property. Now guys, you know that one we have discussed in the raid cases, suppose during the search or after completion of search, if department feel it is for the benefit of the revenue, then they may do the provisional attachment. That was there. But now this is the provisional attachment when this section will apply. Try to understand. This section says that where during the pendency of any proceeding for the assessment of any income, means guys, any assessment proceeding is pending. Any assessment proceeding is pending. Or for the assessment or reassessment of any income which has escaped assessment. Means suppose there is a escape assessment or reassessment pending is proceeding. So I need either normal assessment like 143.3, 144, or any reassessment proceeding is pending. Or suppose for an imposition of penalty under section 271 AAD, they are going to impose the penalty under section 271 AAD, that is false entry penalty, and this penalty amount is more than 2 crore rupees. Means suppose you have taken the fake invoice of more than 2 crore. Means more than 2 crore penalty is possible. Then guys, AO, in order to protect the interest of the revenue means department, may provisionally attach any property of the assessee. They may provisionally attach any property of the assessee after obtaining the prior approval of the PCCIT, CCIT, PCIT, CIT, PDGIT, DGIT, PDIT or DIT. So from the higher authority, AO will take the approval. And guys, after taking the approval from the higher authority, here assessing officer, here assessing officer, here assessing officer, here assessing officer may impose this penalty. You got my point or not? So not may impose, not he may provisionally attach the property. So again, read it. What this section says that either your assessment is pending or any assessment reassessment related to income escaping is pending. Or suppose penalty under section 271 AAD, that false entry penalty amount is more than 2 crore, that is case is pending. Then AO will take the approval from the higher authority. He will take the approval from the bosses, and after taking approval, he may pass an order for the provisional attachment of the property. But guys, this provisional attachment order will be applicable for the 6 month. This provisional attachment order will be applicable for maximum 6 months, but after 6 months it can be extended. So here, such provisional attachment shall remain valid for the 6 months. Attachment will be either of your immovable property or your bank account or your demat account. So bank account, demat account, or any immovable property, they can do the provisional attachment. So here, such provisional attachment shall remain valid for the 6 months from the date of the order, and such extended period as may be approved by the above higher authority. But guys, maximum period can be which shall not be exceed the 2 years, means it cannot be more than 2 years provisional attachment, or 60 days after the date of the completion of assessment proceeding. Means assessment proceeding is completed, after that 60 days, whichever is later period. So it cannot be more than the 2 years or the 60 days after the date of completion of assessment proceeding, whichever is later. You got my point or not? Yes. Now next part, guys, suppose your property is attached. For an example, your demat account is attached, or your bank account is attached, or your any, like you can say that the immovable property is attached, but you want to revoke that attachment. How you can do that? You can just submit the bank guarantee of the equal amount. Suppose if you furnish the bank guarantee, then within the 15 days from the date of receiving the guarantee, department will release that asset attachment. Department will release that asset. So what they are saying, try to understand. Assessee can alternatively furnish a bank guarantee to the AO, and AO shall in such cases revoke the order for provisional attachment within the 15 days of the receiving the bank guarantee. So when he receives the bank guarantee, within 15 days, he will revoke your attachment. You got my point or not? Yes. This is the completion of this section, and this is the expected question. So you can mark this question, like they may ask you one question in the examination. Okay, what do you mean by the provisional attachment of the property, or when provisional attachment is possible, or when you can revoke the provisional attachment? Done. So this is one section. After that, guys, there is a one section 285B. Now this section is not more relevant for the examination purpose. Now this section says that suppose if there is any producer of any movie, producer of the movie producer, or any producer of the OTT series, that web series and all, or any producer of the documentary production, or suppose any event management company, and during the previous year, you know that on the movie production set, there are various workers, they are working on the related to movie. like actor is working, a director is working, various like cameraman is working, as well as some light person is also working, choreographer is also working. So in a year, if payment of more than 50,000 is made to any person, payment of more than 50,000 is made to any person, then guys, this production house, this producer will give the detail related to that payment to the income tax department, and he will submit this detail within 60 days from the end of the previous year. So from the end of the previous year, in the form number 52A, there is a one form, that is form number 52A. In form number 52A, he will submit this detail to the income tax department. So just I'm showing you the form number 52A. So form 52A of the Income Tax Act. So guys, this is the form 52A. This is the form number 52A. Statement to be furnished under section 285B of the Income Tax Act by the person carrying on production of the cinematograph film or engaged in the specified activity or the both. So here detail of the producer means production house detail will be given here. After that, like how many film they have produced, and guys, they have like event management or any documentary production where they will fall, and after that they will give the detail of the person to whom they made the payment of more than 50,000. So here serial number, name of the person, address of the person, PAN or Aadhaar number of that person, name of the film, like related to which film you made the payment, amount to be paid in cash, amount paid other than cash, total amount is paid, TDS is deducted, that every detail will be submitted to the income tax department. So here part B is related to the detail of payment over 50,000 in aggregate made by person carrying on the production of cinematograph film or engaged in any specified activity or due from him to each person engaged in the production of the cinematograph film or a specified activity. Done. Just read from your book whatever given in section 285B. Just read it. Just read it. Read it. Yes, people, done. So this was the section number 285B, not more relevant. Yes, now guys, next section is 285BA. 285BA is related to the statement of the financial transaction. We call it SFT or reportable account. Guys, you must know that like nowadays department is having some scanner. Everything, your every detail will be with the income tax department. Whenever you know that whenever every time whenever you file the return, that time you obviously download one statement that is called your annual information statement, AIS, right? I think AIS only, na? That is known as the AIS. Yeah, annual information statement. And guys, in that annual information statement, all your kundali is there. All your kundali means every detail is there. Means everything is there. Like capital gain detail is already in the AIS. Your bank interest detail is already in the AIS. So everything is in the AIS. Everything is in the AIS. You must be surprised that how department get to know about everything. How department get to know about everything. Okay, where we made the investment, how much credit card bill we have paid in the current year, how much FD we have made in the current year, or suppose how much like deposit we have made in the current year. So how department get to know that? Guys, department has asked to certain people to give this detail to the income tax department, and this person are known as the reporting person. So this person, reporting person, they will give this detail to the income tax department. They will give this detail to the income tax department up to 31st May of the next financial year. So suppose in the current year you did the transaction, then in the next year till 31st May, your detail will be filed by this person to the income tax department. Means this people will file your detail to the income tax department. Now when your detail will be go with the income tax department, which when they will file your detail with the income tax department, try to understand. So here, following person are required to file the SFT, statement of financial transaction, or reportable account up to 31st May after the end of financial year in which transaction took place. So suppose you did the transaction in the current year, so in the next year till 31st May, in the next year till 31st May, your detail will be with the, they will file with the income tax department. Now, first part. First is a bank and cooperative bank. So guys, from the bank or cooperative bank, if payment is made in cash for the purchase of bank draft or pay order or banker check of aggregating rupees 10 lakh or more in the financial year, then your detail will be sent to the income tax department. So here, from any bank or any cooperative bank, if you made the demand draft or pay order or any banker check, and in a year it is a 10 lakh rupees or more in the cash, then bank or cooperative bank will give your detail to the income tax department. Or suppose if your payment is made in cash of aggregate of 10 lakh rupees or more for the purchase of any prepaid instrument. Suppose if you purchase any prepaid instrument, so for the purchase of any prepaid instrument, if you made the payment in cash in aggregate of rupees 10 lakh or more, then your detail will be sent to the income tax department by the bank or cooperative bank. Or guys, suppose cash deposit or cash withdrawal. So anyone, either cash deposit or cash withdraw, including through the bearer check, aggregating of rupees 50 lakh or more in the financial year in or from one or more current account of the person. So you are having the current account, and in your current account with a bank, if either cash deposit or cash withdraw, any one is a 50 lakh rupees or more, then your detail will be sent to the income tax department. So first we have discussed the three transactions. Guys, bank or cooperative bank, they will give your detail to the income tax department. They will file the SFT or reportable account to the income tax department up to 31st May of the next year. And guys, when first is either you have made the DD, that is demand draft or pay order or bearer check of 10 lakh rupees or more in the cash, then your detail will be with the income tax department. Or second is, suppose payment is made in the cash aggregating rupees 10 lakh or more for the purchase of the prepaid instrument, then your detail will be with the income tax department. Or guys, cash deposit or cash withdraw. Cash deposit or cash withdraw, but it will not be aggregated. Means cash deposit will be aggregated. Cash withdraw will be aggregated. And if anyone is a 50 lakh rupees or more in the current account, then your detail will be with the income tax department. That bank or cooperative bank will file your detail to the income tax department. Here guys, suppose for an example, in your current account, in your current account, cash deposit is suppose 40 lakh and cash withdraw is also 40 lakh. Is your detail will be sent to the income tax department? Answer is no. So in your current account, either cash deposit or cash withdrawals, including through the bearer check. Through bearer check, if you withdraw, that is called cash withdraw only. Aggregating of 50 lakh rupees or more in the financial year in or from one or more current account of the person with one bank. Obviously guys, suppose you are having the multiple current account with every bank, then every bank will not able to know that from how much deposited in the other bank. So in simple word, from one bank there are multiple current account, it will be aggregated, and in the all the current account either cash deposit or cash withdraw is a 50 lakh rupees or more, then your detail will be submitted to the income tax department by the bank or cooperative bank. You got my point or not? Yes. Now next part is related to bank or cooperative bank only. Guys, in your saving bank account or any account other than current account, other than FD, if cash deposit is aggregating 10 lakh or more in the financial year in one or more account other than current account and time deposit. So guys, here in the saving account, if there is a cash deposit, here they are talking about only cash deposit. They are not talking about withdrawal. Here cash deposit is aggregating rupees 10 lakh or more in a financial year or one or more account other than the current account and FD. Then guys, your detail will be filed by the bank or cooperative bank to the income tax department. Now next part. Suppose bank or cooperative bank or post office or any NIDI or NBFC. NIDI means chit fund. NBFC means non-banking financial company. So bank, cooperative bank or post office, they will give your detail to income tax department if you have made any FD, time deposit, that is called FD, aggregating rupees 10 lakh or more in the financial year. So in a year, if you made the FD of 10 lakh rupees or more, then your detail will be with the income tax department. So what I am saying that try to understand, one or more FD, that is time deposit, other than the made through the renewal of other time deposit. Guys, for an example, I made the FD in the current year of the 10 lakh or more aggregating in the financial year, then my detail will be submitted by the bank to the income tax department. But suppose in the next year there is a renewal of the FD. So is renewal of FD will also be considered for this section? Answer is no. Renewal of FD will not be considered. Renewal means after 1 year there will be a renewal. Na? So renewal will not be considered here. Here this point says that one or more time deposit you made with the bank, cooperative bank, post office, NIDI or NBFC, and amount is 10 lakh rupees or more, then your detail will be with the income tax department. Now guys, next part. Bank, cooperative bank or any credit card company, and guys, if you paid the credit card bill in a year, either 1 lakh rupees or more in the cash, means in a year, if you paid any credit card bill in the cash of 1 lakh rupees or more, or by any mode 10 lakh rupees or more credit card bill, then that credit card company, bank, cooperative bank will give your detail to the income tax department. So what I'm saying that either you made the payment of the credit card bill 1 lakh rupees or more in the cash, or guys 10 lakh rupees or more in the any other mode, then your detail will be submitted to the income tax department by the bank, cooperative bank or any credit card issuing company. Credit card company means like American Express and all. Now next part. Next part is related to, suppose guys, if you purchase the any bonds or debenture from any company or institution, and if you made the payment of 10 lakh or more, means they received the payment of 10 lakh or more in a financial year for acquiring the bonds or debenture issued by the company or institution other than renewal, then your detail will be with the income tax department. Or guys, suppose if any company is issuing the share and that company received from person 10 lakh or more in the financial year, suppose if you purchase the share of any company of the 10 lakh rupees or more, then your detail will be with the income tax department. Or suppose listed company buy back its share, listed company buy back the share and from any person, and that person they made the payment of 10 lakh rupees or more, then guys your detail will be with the income tax department. So what this point says that buyback of share from any person other than the share bought from the open market, from any person, if the buyback is a 10 lakh rupees or more, then your detail will be with the income tax department. You got my point or not? Yes. Now next part. Suppose if you purchase the mutual fund received from any person by mutual fund company of 10 lakh rupees or more in the financial year for acquiring the unit of one or more shares, one or more schemes of the mutual fund, other than transfer from one scheme to the another scheme of that mutual fund. If you switching the scheme, then there is no issue. But suppose if you purchase the mutual fund from any company of the 10 lakh rupees or more, then your detail will be with the income tax department. Mutual fund company will file your detail to the income tax department. So guys, we have discussed the 8 transaction till now. Try to understand. First point, suppose in cash, if you made the DD or pay order or the banker check of 10 lakh rupees or more in the cash, then your detail will be with the income tax department. Second is payment made in cash aggregating 10 lakh or more in the financial year for the prepaid instrument, then your detail will be with the income tax department. Cash deposit or cash withdrawal 50 lakh rupees or more in your current account or accounts, then your detail will be with the income tax department. Cash deposit in the saving account of 10 lakh rupees or more in the financial year, then your detail will be with the income tax department. Suppose with the bank, cooperative bank, post office, NIDI, NBFC, if you made any time deposit, and guys, that time deposit, that is FD, 10 lakh rupees or more in the financial year, your detail will be with the income tax department. Suppose if you paid the credit card bill of the 1 lakh rupees or more in cash or 10 lakh rupees or more in any other mode, then your detail will be with the income tax department. Suppose if you purchase the bonds or debenture of any company of 10 lakh rupees or more, then your detail will be with the income tax department. If you purchase the share of any company of 10 lakh rupees or more, or suppose there is a buyback of 10 lakh rupees or more, or suppose mutual fund of 10 lakh rupees or more, then your detail will be with the income tax department. Now next part, point number 9. Authorized person under the FEMA receipt from any person for sale of the foreign currency, including any foreign exchange card or expense in such currency through the debit or credit card or through issue of the traveler check or draft or any other instrument of 10 lakh rupees or more in the financial year. So suppose if you purchase any foreign currency from any person, or suppose if you spend in foreign currency through the credit card or debit card or traveler check and all, and 10 lakh rupees or more in the financial year, then your detail will be with the income tax department. Or guys, inspector general or registrar of sub registrar, if you purchase or sell any immovable property and either value of that immovable property is 30 lakh or more, or stamp duty value is a 30 lakh or more, then your detail will be with the income tax department. So what I am saying that if you purchase or sale of any immovable property for the 30 lakh rupees or more, either value or SDV is a 30 lakh rupees or more, then your detail will be with the income tax department. And guys, person subject to audit, if any person subject to audit, and if he received the cash payment more than 2 lakh for the sale of goods or service to any person, any nature, means suppose if I sold any goods or service and from any person in a single transaction, if I receive the more than 2 lakh in the cash, then I will give this person detail to the income tax department. You got that? Nowadays you will not accept also, because there will be a section 269 ST. Nowadays there will be a section 269 ST, so you are not going to accept. You got my point or not? Yes. So these are the 11 transactions where this reporting person will file the SFT or reportable account to the income tax department, and they will submit till 31st May of the next financial year. Now guys, here one points are given. First is reporting person, that is except 10 and 11, while aggregating the amount, take into all account of same nature maintained in respect of that person during the financial year. For an example, with ICICI Bank, I am having the 3 saving account with the ICICI Bank, and I am depositing cash in that 3 saving account of the 5 lakh with the ICICI Bank only. So is that will be aggregated or not? Answer is yes, that will be aggregated. Second is aggregate all the transaction of the same nature recorded in respect of that person during the financial year. Suppose if there are transaction of the same nature, means I have purchased the mutual fund from the Kotak mutual fund, first 3 lakh rupees, again 3 lakh rupees from Kotak mutual fund, again 3 lakh from Kotak mutual fund. So Kotak mutual fund 3 lakh, 4 time I have purchased. So I have purchased total mutual fund of the 12 lakh. Is my detail will be sent to the income tax department? Answer is yes. Here my detail will be sent to the income tax department. Now next part, guys, attribute entire value of transaction or aggregate value of all the transaction to all the person in a case where account is maintained or transaction is recorded in the name of more than one person. Now guys, for an example, there are two accounts. One is in the name of Mr. BB, means I am having one saving bank account, and one account I am having with my wife, means my wife is the joint owner. So BB and Mrs. BB. So BB and Mrs. BB. Now in one account my deposit is a 7 lakh. Now in the joint account also deposit is a 7 lakh. So question is that, sir, is my detail will be submitted to income tax department or not? Answer is yes, because all account including the joint account will be considered. Now guys, suppose my wife is also having one separate account, Mrs. BB. In that account there is a deposit of cash deposit is 5 lakh. Is my wife detail will also be sent to the income tax department? Answer is yes. So for the all joint owner, all the joint owner or joint holder, detail will be sent to the income tax department. Or I can take one example. Suppose for an example guys, me and my wife purchase one property of the 40 lakh rupees. So property value is 40 lakh, but that property is in our both name. So 20 lakh paid by me, 20 lakh is paid by my wife. But that property, that transaction value is a 30 lakh rupees or more. So is our detail, both the PAN card holder detail will be sent to the income tax department? Answer is yes. So what this point says that entire value of transaction or aggregate value of all the transaction to all the person in case where account is maintained or transaction is recorded in the name of more than one person. And guys, apply limits separately to the deposit or withdrawal in the point number 1 of the table. Point number 1 was that is the current account, cash deposit of 50 lakh, cash withdrawal of 50 lakh. So deposit as well as withdrawal of the 50 lakh will be checked separately. Will be checked separately means here like deposit also separately and withdrawal also separately. Now guys, there is a one notification that is the 16/2021. This is very interesting notification. This notification says that, hey guys, here they will report the transaction only when the limit is more than that prescribed limit. But guys, here they mention that for the pre-filing of your income tax return, this person will mandatorily required to file the SFT or reportable account to the income tax department. Here pay attention. For the purpose of pre-filing of ROI, information relating to capital gain on transfer of the listed security. Suppose if there is a capital gain on transfer of listed security or any units of mutual fund or dividend income or interest income shall be furnished by this reporting person. Now guys, RSC means recognized stock exchange, recognized clearing corporation, depository, recognized clearing corporation, depository and registrar. They will give the detail of capital gain on transfer of listed security or any units of mutual fund. So on listed security, whatever your capital gain detail, or on the units transfer of mutual fund, whatever capital gain detail, that detail will be submitted to the income tax department by the recognized stock exchange, recognized clearing corporation and depository. Guys, if company give any dividend, then that dividend, even that dividend 5 rupees of dividend, that detail will be sent to the income tax department. So in your annual information statement, you can get the detail of dividend. And guys, if bank or cooperative bank or postmaster or NBFC, if they are paying any interest, even that 1 rupees interest detail will be sent to the income tax department. Earlier till last year, this interest limit was 5,000, but guys, now they have changed and they says that even 1 rupees interest is paid by the bank or cooperative bank or postmaster or NBFC, then they will submit your detail to the income tax department. But other than Jan Dhan accounts, they have given one exception, that is Jan Dhan account related detail. There is no need to give to the income tax department. So here note, information to be reported to all the account or deposit holder where interest is exceed 0 per account of the financial year, excluding the Jan Dhan account. Now guys, there is one interesting part. There will be related to the penalty. Here section 271 FA, this section says that, guys, SFT, what is the due date of SFT? Is 31st May of the next financial year. So 31st May of the next financial year is a due date. Now suppose if you have not submitted this SFT, means this bank and all, registrar and all, if they have not submitted the SFT or reportable account, then what will be the penalty? So guys, here the section says that penalty will be applicable from 1st June, and this penalty 500 rupees per day is applicable from 1st June, and this penalty will be applicable till the date given in the notice by the income tax department. Because if you will not file the SFT na, then department will send you one notice, and department will ask you to file the SFT. Department will ask you to file the SFT, and they will give you some time limit ke within this particular time file the SFT. So till the expiry of that notice period, there will be a penalty of 500 per day. So what this point says, try to understand. From 1st June, after end of the financial year, in which the transaction are recorded till the date of furnishing SFT, either you file the SFT or the date of expiry of time specified in the notice, as the case may be. The date of expiry of time is specified in the notice, as the case may be. Till that time, there will be a 500 penalty. And guys, that notice period is already expired. Then your penalty every day will be the 1000 rupees penalty. So after the expiry of notice period till the date of furnishing of the SFT, penalty will be 1000 per day. So what I am saying, that 500 rupees penalty will be applicable from the 1st June, and this penalty will be applicable till the time given in either you file the SFT or till the time given in the notice of income tax department. And guys, after expiry of that notice, penalty will be 1000 per day. Now guys, there is a one section 271 FAA. 271 FAA. This section says that penalty for incorrect information in the SFT. Suppose you have given some incorrect information in the SFT, and intentionally you have given the incorrect information, then there will be a 50,000 rupees penalty. So what this section says, penalty is 50,000 will be levied only if the IT authority is satisfied that inaccuracies due to the failure to comply with the due diligence requirement or deliberately on the part of that person, or person know the inaccuracy at the time of furnishing the SFT but does not inform to the IT authority, or person discover the inaccuracy after the SFT is furnished and fail to furnish the correct information, then guys, there will be a penalty of the 50,000. And this year they have amended one more point, along with this 50,000, for every wrong reportable account, there will be a 5,000 penalty. Suppose one person PAN number is wrong, and wrong PAN number is given by this person bank to the income tax department, then every wrong reportable account, there will be a 5,000 penalty. But guys, suppose this 5,000 penalty can be recovered from the account holder, because account holder has given the wrong PAN number. If account holder has given the wrong PAN number to the bank, then bank will give the wrong PAN number only to the income tax department. So in this particular case, for every reportable account, there will be a 5,000 penalty will be paid by the bank, but bank can recover from the account holder. So what this point says, try to understand. Penalty of 5,000 for every reportable account in addition to the penalty of 50,000. If it is provide inaccurate information in SFT and inaccuracy is due to the false or inaccurate information furnished by the account holder, and where such penalty is paid by reporting person, such person entitled to recover such sum so paid on behalf of account holder, or to retain out of any money that may be in its possession. So they are eligible to recover this amount from the account holder. Done. So this is the completion of this section. Tomorrow we will start with the next section. And guys, just do some homework today. Just mark some homework. Just mark some homework question. In your compiler, just mark some homework question. So question number 1, question number 2, question number 3, question number 4, question number 5, question number 6, question number 7 provisional attachment, question number 7 till 7, all question are homework. 1 to 7 and question number 9 also. 1 to 7 and 9. 1 to 7 and 9 are homework. So that's enough for today. 1 to 7 and 9. So just mark the question number 1 to 7 and 9 and just revise that. Okay. Thanks a lot, people. That's enough for today from my side. See you tomorrow. Bye. Tomorrow there will be a lecture or not, I will let you know, because there may be possibility that we don't have the we are giving the Diwali vacation to our staff. So I have to check that. I will message you. Don't worry about that. Our staff will message you about tomorrow lecture. Okay. Thanks a lot, people. That's enough for today from my side. Bye. Take care.